All right. Good morning, everybody.
Good morning.
Good morning.
We have, um, my name is Daniel Hughes. I'm a broker owner. We have Dineza, Pam. I'll let you guys introduce yourselves.
Hi, I'm Vanessa. I'm a licensed mortgage originator in Miami, Florida.
And my name is Pam Marin. I'm with Innovative Mortgage and I'm in West Florida.
So today we've been running a series for the last, what's it, Pam, been almost a year now? Are we knocking on the door of almost a year?
Yep.
And that series has been called Brokers and Bagels. And so if you're watching this at a future time, you can go back and see all the times that we've done these different topics. A lot of it was, towards maybe something like down payment assistance. And so what we're going to do going forward is just changing up the topics. And I think, one of the things I wanted to say is if you guys have any things that you guys are looking for, once you watch this video, if you're watching it now live, or if you are, which we don't have anybody live at the moment, tell us what we want, and tell us what you guys are looking for, because we're kind of seeing that day to day. Do you guys agree? Like, I mean, we want to be able to bring stuff to you guys that is maybe in the moment now useful.
Absolutely.
Um, so today with Brokers and Bagels, we are going to go over pretty much what's happening. Um, Pam, Dinez, and I are all in Florida, different locations of Florida. And that part is really unique because what Dineza experiences is different than what Pam experiences, and myself included. We're all in a little bit different of markets that bring variety that can help a lot of people. And so I'm kind of just going to jump right into it if you guys are okay with that, Dinez and Pam. And you
Mhm.
guys see here on the screen, one of the things you can do is if you are looking for where this information is at, Pam has spent endless times and hours on this website and put so much content on there, and it's so ever growing. So if you're wanting to know where to go, you can go to clientstohomeowners.com, which is scrolling across the bottom there. And that's where we're going to kind of use this as a guide for today and what we're going to talk about. So let's just jump right into it. Um, Dineza is in Miami, Florida. And Dineza, how much of your market is condos?
Oh, wow. I would say probably about 70%, if not more, just because of the current market and where everybody's able to somewhat afford today. I would say it's probably about 70%, if not more.
So, and going into what we're going to talk about, over the last 12 months, has condos been difficult for you? Like, have you seen that it's tougher to get condos approved, do certain things with condos, get certain clients in condos? Kind of talk about some of the troubles you've seen with condos.
It's been very difficult, especially with individuals doing minimum financing. I'm sorry, minimum down payment, because of issues with reserves, for example, especially with what happened with Surfside, which everybody has heard about. There's a lot of buildings now going through certain structural repairs, which brings also an issue to getting qualified for financing. I just had an issue the other day with the master insurance. They didn't have enough coverage for the fidelity aspect of it for the association. It just seems like every day we're just finding out more and more issues that condos are going through, which are hindering us being able to get those units financed.
And so, that leads to what a lot of us might know as non-warrantable condos. So if you don't know, Florida is literally different than all other states. We are the
Yep.
only state with a loan to value difference, right? We are condo heavy in a lot of markets like Miami, Orlando, Tampa, Jacksonville. Your big cities that are very heavy in condo associations. Non-warrantable condos come into play, and just like you heard Dineza say, it's not just maybe something simple as a budget is off. We're talking now there's problems with structural engineering issues, there's insurance issues, there's budget issues still, investor concentrations. And so you got to go to non-warrantable route, right? And so, Dineza, do you find yourself getting more into the non-warrantable space? Do you do non-warrantable condos? Are you originating non-warrantable a
I've done,
lot?
yes. I've done non-warrantable condos. The situation comes with the down payment. With these non-warrantable and non-QM products, you need a higher down payment, and unfortunately, a lot of first-time homebuyers, for example, don't have that type of money to put down. So there goes the issue of finding an actual condo that you're able to finance with minimum down payment. So it just gets a little bit harder, especially for first time home buyers. I With investors a little bit different, because investors, do have the source, the funding to be able to put a higher down payment. So I don't find that to be an issue when I go non-warrantable for investors, but I do with first time home buyers.
Yeah, and that's a great point. I mean, a lot of the first time home buyers are being pushed out, right? The push out of this is something I think a lot of people know, they get it, but I don't think they're really understanding how big of an impact Florida is taking, because affordability is the number one issue for a lot of people. And so we're sitting here being like, well, condos, especially in a market like Miami, that's all they can go to. They don't have a bunch of manufactured homes or smaller units. It's a
Correct.
condo. And then if the condo can't get approved, that client doesn't have the money. So home ownership in some of these cities is getting, more tight and a lot harder than maybe somewhere where Pam and I are. I have no condos where I'm at, really. When I say no, but just very little. So, I might see 5 condos in my entire year of originating, compared to where it could
Wow.
be a big portion of y'all's business in a certain city, right? So,
Yeah.
non-warrantable, these changes. I was at a conference a couple weeks ago, and one of the stats was 70% of condos in Florida are non-warrantable. And I think that number is probably even higher as we keep moving forward. And so,
Yes, especially, I'm sorry, Daniel, especially I think with the insurance prices going up. These associations are opting to have different coverages, which are not being accepted through Fannie or Freddie.
yeah, it's like Dineza, Pam, and I talk a lot, and one of the things, and you guys are going to get to hear us talk a lot too. So, one of the things is the cash value. I brought this up a few times, and it's something that associations are opting for with their insurance, where they'll take a cash value policy for their master policy, and any of your Fannie Mae approved lenders are not accepting that. And you heard Dineza start off, she even had an issue with the fidelity. And so, these issues that we never really thought of or never came up that often now are becoming more frequent. The few condos I've seen over the last few months, 3 or 4 of them got denied because of the actual cash value. And so,
Hmm.
master flood policies, a lot of these places don't want to carry a flood because they don't need to, and it's very expensive. So if it doesn't have a master flood, you're dead in the water. Um, so it's really interesting how Florida, we're facing not only affordable issues with these types of things, it's now insurance has come into play, just even with these master policies. So yeah, it's definitely something I would recommend getting up front as fast as you can. Get these policies as quick as possible. Agents can get them relatively quick, or a title company might be able to help you if you're having trouble. But get that policies. I mean, that's one of the things, like before I even want them to go into contract, I'm trying to get a policy. So trying to make sure that,
Yeah, you usually call the association. They'll share at least the insurance agent's contact information.
yeah, because I mean, it can kill a deal. You don't want to go 3 weeks and then it kills a deal, right? And so, with that, condos, I think there's been a lot of talk here in Florida, condo reform policies always, I think it's for the last couple of years I've seen there's something relating to condos in bills in legislature. And that's something we want to keep our eye on because they're changing the way, My Safe Florida, right? So if you know what My Safe Florida is, where you do a wind mitigate, home inspection, wind mitigation through the state, and they'll help you, enhance your home for protections from hurricanes and storms. Well, that's transferring to condos now. So for every $2 that a condo association spends on these type of repairs or upgrades, that program will match them $1, and which is huge because now, like Daneza said, structural issues. She's in Miami. She witnessed the destruction that Surfside took place in her community, and we're all affected by that. And that's not just Florida; the entire country was affected by that. And we're still here in Florida specifically starting to still feel effects and continuous of like the inspections, right? Vanessa, like you talked about, like these condos are going to have to be inspected and they don't have the budget for it, some of these places, right?
Yep.
So,
And the special assessment goes also, they apply special assessments.
yep.
And that's another reason too. Either the borrower, if they're refinancing, can qualify, or the buyer, if the seller is not willing to pay off the special assessment at time of closing. I'm working with the investor right now in Miami Beach looking for a unit. I mean, I want to say probably 5 out of the, let's say, 8 properties that he's seen, the buildings are all going through some sort of structural repair. Balconies, hurricane impact windows, pool. So we have no other choice than to go non-warrantable. And that's if we find a lender that's willing to accept it.
Exactly. Yeah, because they still have their own questionnaire. They're still doing their own due diligence. And so it's not like it's the save all, right? But it's just a little bit more lenient, hoping to get that deal done.
All right.
Anything else you want to add on non-warrantable condos? Anything that you think people might need to know?
I think just in general with condos, I think realtors, I would suggest do your due diligence. Ask the listing agent to get a copy of the approved budget. Super important, the current approved budget, because as you know, Daniel, we can go based on proposed budgets. At least you can roll out those. They don't have any reserves. If you're looking for buyers, they're trying to do minimum financing. I think that's the first step. As Daniel mentioned, try to get the contact information for the insurance. I review the budgets for my realtors. I have no problem doing so. I'd rather do that than them get into a contract and then turns out there's no reserves. Or I even send them over to, as you know, Daniel and Pam, to our lenders, and they go and they look them up through the Fannie Mae website to see if they're approved or not, or if they have any issues that's already been posted on their website, which we know then to discard and not move forward with that unit. But I would say just try to, like you said, Daniel, try to get as much information up front that's going to help us, because unfortunately, these associations or management companies don't provide us any more information without getting paid. And we have to request that condo questionnaire.
Yeah, no, it's highly important to do that. And I, it's sad is because I've heard agents say, like, I think I'm, it's probably true to some extent that condos are going to be cash only, right? And that's the way our market's been kind of turning, at some of these places are good. And then we get worried of investor concentration. And so condos is going to be, I think, a topic we talk about for Florida's got 2 big problems, condos and insurance, right? I think that's going to be our main hotspot for a long time coming, because all of this is affecting the affordability and how we qualify these clients. So, yeah, and if you guys need more help on, if you never know what to do, like, definitely reach out to your account reps, or if you're with a lender or, condo project manager or something. If you don't have access to it, use one of your resources that can get access to it. You get a lot of, like what Daneza was pointing out too. So, and so lead me to the next.
Check your lender's approved condo list too. That's always helpful.
Yeah, good point. Yeah, they always got that updated list. So let's go into flood insurance. So this year, again, today where Florida is a hot topic because that's where we are. That's what we know. It's where all of our changes that we're following today really are taking effect. Some stuff that can go, if you're national level, could have some effect. But this bill specifically is here in Florida. Is that now, especially after Hurricane Ian over here on my coast, people were rehabbing their home, and not even before the insurance. They could, if they were lucky to get the insurance money fast enough. If not, they were rehabbing it to sell it quickly. And so if it flooded, there was really no way to know if it flooded unless it was disclosed. So I had to rely on the other agents to say, hey, yeah, this house was damaged due to flood. Well, if they never took a claim, I couldn't find out if it was flooded through the insurance process, right? So what this bill did was it's now enforcing that if the seller had prior flood damage or the home had any flood repairs, that you have to disclose that. And so we have a seller's property disclosure in Florida that we're supposed to give to the clients, have signed by all parties. And there's a little bit of information on there, but now that's going to get more in depth. And so now if there was any flood damage, it has to be disclosed to the buyers and disclosed up front. So, which is good because I know here personally, there was a few clients that were buying homes that had no idea flood happened until a home inspector said, hey, the drywall's been repaired and it looks pretty fresh. You need to find out what happened. And so that's kind of what this bill is going to be fixing. Any input on the flood insurance bill?
Okay, flood insurance. I always recommend buyers get flood insurance even if you don't need it. For the cost of it, it's worth it.
And if you guys don't know, whoever's watching this, if you're in, it should be anywhere actually, but I will tell you, if you're buying a home that's in a flood zone and the previous owner has flood insurance, and if you're a real estate agent, the best thing you do for due diligence is get a copy of that policy. Reason being is the agent that for your buyer, whoever they use, that existing agent or a brand new agent, they can apply those credits to the new policy. Almost think of it, the easiest way is transferring a policy.
Mm-hmm.
So it can save your new buyer a substantial amount of money.
Like the grandfather did.
Correct. Yep. So if someone's got flood and you're buying a home in a flood zone, the first question I'm asking is, does the seller have a flood insurance policy? And can we get a copy of the declaration page? Because now I can give that to an agent and it can, I've seen it save $2,500, almost $3,000 on clients before. So because it was because what they do is they pretty much apply the credits towards, that new policy. Because if you just go and get a whole new policy, they take it blind, like there was never, ever a policy there before. And so they treat it as worst case scenario in most instances.
Makes sense.
Yeah. Pam, anything else on flood you want to add in?
I think in the next 3 years, there is going to be an application of flood insurance across the state. And FEMA is going in and looking at all of the areas and assessing how they're going to apply insurance, even to non-flood areas. This came from my insurance person. I'm in a non-flood zone, but he said if I got flood insurance, non-flood, when we purchased our home 6 months ago, that we would be grandfathered in rather than waiting for them to come to your area and assessing the area and then putting a baseline cost for everybody on it, even if they don't have flood insurance. And so if you are in a non-flood area, you may want to consider looking at what the flood insurance would be now, because it's coming. You're gonna get it in the next 3 years, and the whole state will be covered. So that's just, ours costs $600 a year. So I don't know what it'll be when they assess this area, but we're told that this is going to be lower than what it'll be.
That's a great point, honestly, Pam, because I know down here in Lee County, and you've probably seen it in your area up in the Tampa Bay area and Deneza for sure in Miami. But every time FEMA updates these maps, new homes get added in, and these people are blindsided by how much. Oh my gosh! Now I need flood. I'm being required to have flood because I have a mortgage, and I'm now in a flood zone. And it could force some people to even sell their home or not afford their payment anymore. And so that's a great point, Pam. Get it now while it's cheap and carry it through if you ever get it. That's a great suggestion, honestly, because I don't think a lot of people think that. Even though I'm 20 miles from the coast, doesn't matter. Where I'm at, it flooded 20 miles inland up to people's 6 to 8 feet to their roof during Hurricane Ian.
Yeah.
So, FEMA takes that into consideration. Imagine now in the next map update, we're going to see those flood zones change for those areas that got hit that never were in
And
flood.
I want to say it's coming recently.
Go
Say
ahead,
that
Deneza.
again, Deneza?
And I want to say it's coming recently. I think the July.
You talking about a flood map update?
Yes.
Deneza?
I want to say it's.
Okay.
I want to say it's this July.
Yeah, I know down in Lee County, they did theirs in November of 2022, and I think it added in like almost 2,000 new residents into a flood zone. So it wasn't a small update. So you definitely want to be on top of that.
And flood
Moving along.
insurance is also assumable. So I don't know if it's for everyone, but my insurance agent told me flood insurance is assumable. So if you are in a non-flood zone now and you get a lower policy, it can help you in selling it in the future if you're grandfathered in. So that was my reason for doing it.
Yeah, that's what I'm saying. Like, it's important to get that policy to the new buyer. Like, it's a massive savings in a lot of instances because of you being grandfathered in that many years. So maybe that's a good topic. We'll bring along, going that deep dive with an insurance agent on some of those best practices on what we can do to help the new buyer, right? And in this market, I think a lot of our conversations are going to be around, about keeping it affordable, like getting people in homes. Like, that's what our jobs are to do. And, we're always facing these different challenges that come in front of us to stop us from trying to do that. And so, that's what the whole concept of what we're doing is to find these nuances and help overcome them. So the next thing that we have on the site, if you're following kind of like an agenda, go ahead, Deneza, sorry.
No, I'm sorry. No, I was gonna add to that and say that I think a lot of buyers, unfortunately, they don't think about flood insurance. When I get a new contract in hand, the first thing I do is I go and I do the map search and I search the address and see if they're in the flood zone, because obviously I have to take into consideration that potential additional cost to the buyer. And all the time, I always get the same response. I had no idea. I had no idea. How much is that going to be? So I think it would be a good idea if, agents also let their buyers know about flood insurance and probably even look at properties ahead of time on the flood map just for them to be aware of it.
Yeah, and it's a great point because you never know, like what you see on the screen. And one of our topics is, we talked a little bit about HOAs getting a master flood policy. Even if they're in a flood zone, they're not required to have it. And they don't have to carry flood. So I had an instance where kind of what Pam put on here, like literally like 3 feet of the corner of a building was touching a flood zone and the rest of the complex was not. And the lender required flood insurance. And even though my client's unit would never be affected, the master policy still has to be in place. If you're going Fannie or Freddie, you still need a master flood policy. And it killed that deal. And just because of that corner, and we tried fighting it. You can do letter of map updates. LOMAs or amendments, excuse me. And I think that's something that a lot of people don't know. Like when we just talked about flood even affecting new homes, like you could be in a condo, all of a sudden that's now in a flood zone. And if the HOA doesn't carry a master flood policy, you're on your own. You're fending for yourself. So yeah, that's something that I don't think a lot of people, when they're looking at the condo markets, think about, is that it might not look like, even on FEMA, it did not look like it was in a flood zone. The appraiser even said flood zone X. Everything came back not a flood zone, but the determination from the lender said, and then we contacted FEMA and there was a map amendment that put a corner of the building in a flood zone, and it required them, and the HOA was not going to get a master flood policy. So
yeah, they're not incurring the extra cost if they don't need to.
Yeah, it's definitely, and that's part of getting these condos approved up front. Looking like the highlight there, it's like getting these, searching, like what Daneza said earlier, that condo project managers is very important. If they don't carry master flood, it's not saying that the condo project manager is going to deny them. They might not know that yet. So it's good to cover all your basis of what am I going to run into with these type of units. So yeah, and to get these condo associations to be required to carry flood is going to be an act of God, to be honest with you. They're not going to want to do it. They're not. It's very expensive. They rather do special, like what Daneza said, they're going to do a special assessment to fix the damage. They're just going to tack it into the, they don't want, HOA dues are already rising, right? HOA dues, what's the average HOA, Daneza, down in Miami? If you were to guess.
Right now, I would say probably for a 2-bedroom, easily $450 average. And if you're at the beach, I just saw a special assessment alone for $1,200 a month, and their regular assessment was $800 at the beach.
So yeah, that could kill deals in a matter of seconds. So it's important to know these things and to get as much as, like we keep saying, up front as possible. And one of the things I like to mention to people that I don't know if a lot of people realize is when people say condos, I think a lot of people refer to high-rise buildings, right? They're going vertical, 30 stories up in the sky, and that's a condo. Yeah, it is. But also townhomes, manufactured homes, little casitas, anything. What dictates a condo is in the HOA and how they're structured.
Yep. Look at the legal description.
Yep, exactly. Good point, Daneza. Look at the legal description and how it's being utilized, right? So you might think, hey, I know over here for me, it's manufactured homes in a retirement community. And I'm like, oh, it's just a PUD. And no, it's not. It's actually a condo association. They have condo docs. And so you need to pay attention to that. And Daneza's right. The best way to look at that is the legal descriptions. Look up on your property appraiser and see how it's listed.
Yeah, we have that issue here with attached townhouses, which are really condos.
And but it's because they're in a condo association, right? So
correct.
And you're going through, you got to do a budget still. You got to, and it's really unique. But what's interesting is, like, if you have, a condo association that's like what Daneza just said, they're attached little villas, and you don't have a master flood policy, for example, you can get what we call a single unit policy. And how Fannie Mae and them read it is, if it's a 2 to 4 unit condo, a single unit policy can be in effect. If it's more than that, then they need a master flood policy. So a single unit policy can, in Dinez's scenario, help that client that, hey, this association doesn't have flood, or they just want to get their own flood. Like Pam said, they can do that with a single unit policy.
And that's 1 to 4 units?
It's 2 to 4 units.
Or 2 to 4.
I think 1 to 4. Yeah, you're right, Pam. It's 1 to 4 units.
I did not know that.
But if it's a high rise like that, then the master flood has to be into effect. Yeah. Anything else on condos? Because I think the next topic is going to take up our next 20 minutes.
We're all waiting.
I think we sit here all day and talk about condos, but
Well, the next two topics is let's skip the NAR topic right now. Let's go right into the hometown heroes.
Yeah.
Pam or Dinez, why don't you share some of what's going on with hometown heroes? Which one of you want to?
Dinez, go ahead.
Well, everybody's super excited. Everybody's super excited about hometown heroes coming back, which we are too, because I think it's going to give a lot of buyers an opportunity they weren't able to take advantage last time. But as you can see, 100 million is going to be available July 1st. And like I tell all my buyers, even though that sounds like a lot of money, it's not, especially for the whole state of Florida. And my recommendation for all my buyers is get pre-qualified ASAP. Start working with your realtor. Literally as of now, hopefully you can find something come, let's say, last week of June, and then we can get you in, processed loan submission by the first week of July and get you locked in. Remember, the funds are not guaranteed unless your loan is locked, which is super important. So that is what my technique is going to be this time around. Hopefully I could get a lot more buyers funds this year, and they could take advantage of the help.
Yeah, I think a lot of people are waiting for hometown heroes, knowing that it's being funded, but like Dinez, it's going to go quick. Back in November, we got it, funded again, and that money was gone like 6 to 8 weeks. And a lot of these changes with hometown heroes, now it's open for everybody. We're going to talk a little bit about some of the income changes and income level changes, and some of the, they kind of relaxed the guidelines on this. And I don't, in my humble opinion, I think it's maybe not the best move. That's why the money's going so fast. There's a lot of other outlets that aren't being utilized. And especially, and if you don't know, on clientsofhomeowners.com, there is a plethora of stuff about down payment assistance, from bond programs to proprietary lenders to state funds. And here in Florida, I will say that I know SHIP and the Affordable Housing Fund is being refunded as well. They're putting money into that, where you will hopefully see, like, I'm in a county where we don't have a lot of SHIP funds or any at all, and haven't had for a little while, especially because of the hurricane now. But that money now is looking like we'll see some money come down the pipe and be able to give people SHIP funds. Which, Pam, you've done a lot with SHIP funds, right? I mean, you've dabbled in that a lot. You think it's probably the second. Pam, in your experience, I'm going to ask you and put you on the spot. SHIP funds versus like hometown heroes, ease of use of doing the process, and like, do you see there's a big difference between the two? Like, is hometown heroes everyone's favorite because it's super easy to do versus doing SHIP? Like, is there a difference between the two and getting those files approved and processed?
I would say SHIP, doing DPA with SHIP is the best, because you can use the funds to buy down a rate or loan amount, and decrease the MI. And if you buy down the rate, obviously that's a lower rate. But of all of the down payment assistance, the Florida bond and SHIP is the lowest interest rate, and the Hometown Heroes provides the most. You can get up to 5% of loan amount in down payment assistance and closing cost, whereas the Florida bond is the 3.5, but it's still the best rate. Will there, as a broker, we have got the best DPA of anybody. We can do the state stuff like Hometown Heroes and the bond, but we have got a huge number of wholesale lenders that are putting out DPA. I just a mention on the bottom of a brand new national DPA through Kind Lending, and the same down payment assistance I have compared it to other wholesalers. We're now getting down payment assistance where you can have a non-occupant co-borrower, where you can have a DACA client be on the down payment assistance as the non-occupying co-borrower, where there is no income cap. The income cap has been an issue, and as well as ratios. The national program, it's called the National Home Buyer Fund, and it's named different with different lenders, but Kinds will actually let you go up to a 50 back DTI. It's lender paid, which is a wholesaler, that's really important. And the pricing is pretty decent. So, and they've got a forgivable DPA. So the DPA that's coming onto the market now is incredibly competitive, and brokers have more of it than retail, because when money runs out, we've still got all of our wholesaler down payment assistance lenders out there.
And it also allows for lower credit scores, Pam.
Yes.
Because Hometown Heroes is 640, which is low, but I know that the national allows to 600, I think.
Yes, 600.
Yeah.
Equity Primes goes down to a 580.
Yeah.
So right. It's definitely what Pam's point is, that these programs are great and all of us are going to use them, and we're going to be the first to fight for clients and lock loans and get them in as soon as we can. It's going to be the first. I think Hometown Heroes is easy and everybody knows it, and it's got the hype around it, right? So I think a lot of people are waiting for that. Real estate agents, loan officers, borrowers, anybody that's in the business or trying to buy a home right now has heard of Hometown Heroes here in Florida. And so I think with that being said is, like, know what other sources you have. Look into your county program. And if you need, trust me, we're going to do more presentations on down payment. I think it's something, especially Pam is the guiding light for, at least for me, in down payment assistance. She's the guru. Exactly, Vanessa. She stays on top of this stuff, and she has a passion to help. And I'm lucky, and I'm always honored to say that, because Pam has taught me everything I know. And I would say I'm getting to the level of knowing what the heck this stuff does and how it works. So keep your eye on Hometown Heroes. Some of the income limits are going to be changing, going up. So I think we were trying to, did we find this morning that was confirmed, or?
No, it's something that I was able to obtain from e-housing from the state directly, and they mentioned that they were working on that. So nothing confirmed as of yet. But the income limits, and also the eliminating the 35-hour requirement and just doing full-time. So I'm hoping those do pass.
And it's still just as long as your business is in Florida, you work for a Florida employer, all that good stuff. So
so far.
Okay. Which is good. So keep your eye on. Go ahead.
I'm sorry, Danny. I was saying, what I like about the program is the income limits, because at least for us down here in Miami, what I come across are individuals that, because they make too much money, they don't qualify for certain assistance programs, but they would qualify for the Hometown Heroes. So, or they either qualify for the assistance program due to their income, but then they don't qualify for a mortgage because they don't make enough money.
Exactly. Yeah.
So the Hometown Heroes is kind of like that sweet spot.
Yeah, like I said, it fills a lot of need for people, and that's why it's going to go by so fast. Is because it's just it fits all the boxes for a big majority of the buyers. So yeah, DPA, you'll see, and check out Clients and Homeowners. Like I said, Pam's got a bunch of content on there that she's found, and every time she learns something new, she's sharing it. And so that's what we're going to be doing here is, DPA, we'll go dive deep into it, but get ready for Hometown Heroes. Start prepping your clients. Do your advertising now. You're already starting to see flyers for it. You're already starting to see advertising for it. So we know it's coming, but it's going to go fast. So Pam talked about this a little bit, was the 3.5% down payment with the National Homebuyer Funds through Kind. We'll probably have a whole separate show on that, conversation on that, but it's something to at least familiarize yourself with. Pam gave a little bit of the highlights already. It is, I've been calling it in my head like the gap filler of a lot of things that, like Daneza just said, you might have a client that's not approved for something, but this could fill it because they have a lower credit score or no first-time home buyer requirements or so many other things that this program can fill that the others have a restriction on. So we'll definitely be diving deep into that as well. Pam, share with us a little bit about, we've had on Brokers and Bagels in the past. We've had Dave and Melissa on from SDS or Student Debt Solutions. But we want to highlight this real quick as this is something coming down the pipe, right? This is something that is on a federal level. So it doesn't matter if you're in Florida, if you're in Washington State, it doesn't matter where you are. This is going to affect all of our industry. And it's kind of, I call it the silent giant in my head. Again, I do these weird things in my head. But Pam, how big can this be, what's about to change with student loans and what SDS has been sharing with us?
Well, in October of last year, the forbearance of government student loans stopped. And basically what occurred is everybody that had student loans was supposed to be getting repayment plans done. And a lot of people haven't. I have qualified a lot of people that they didn't tell me about their student loans when we first got on the phone. I pulled the credit and there's student loans all over the place. And they forgot about them because they've been in forbearance for 3 years. So getting the repayment plan in place by September 30th is critical. If you don't have it in place by September 30th and you don't make payments, then it is going to affect your credit, which can affect your ability to buy a home. So if you know of anybody that's got student loans, tell them, get the repayment done now. What we've got on here, this is actually a service that we included in a joint effort we've all been working on called Home Prep, but Student Debt Solutions has the ability to show anybody with student loans what a repayment plan that they would be eligible for is. And it's free to find that out. And the link is on the site. And basically, if you need help, you can get this done through your student loan company yourself. But these student loan companies are overwhelmed and they're not giving all of the options. And that's what we're hearing from clients that are saying, we don't know what to do yet. We don't know what the repayment plan should be. What basically SDS does is you put in your current income, what your debts are and your family size, and then they spit out the programs for you. You don't get turned down because you've got a student loan. They're showing you what your options are. Forgiveness is still included if you do a repayment plan. If you don't do that and your loans go into default, then you're going to not be eligible for any forgiveness or plans or benefits in the future. And most importantly, we don't want it to affect people's ability to get into a mortgage. So try this out. You don't pay anything. when you do pay is if you want them to help you do the paperwork to get one of these plans in place. And the one, even with the chat bot, which I just did with a client yesterday, was $89, and she's unemployed right now. And it was a 13-page document. And what they do is they put the information you enter on the documents, and it took us 10 minutes to get an answer. And she could talk to the bot about, different questions she had. And if you need more help, if you want somebody to hold your hand through it, there's another service that's one step up in cost. And there's even a lesser cost service if you can just do the whole thing yourself and you don't want their help. So I would encourage everybody to go to this link. It's actually called MyResolvent, RESOLVENT.com. And it is the simplest way to find out what you need to do for your student loans. So get on it when you see your clients have student loans and tell them to get it set.
Mm-hmm.
Yeah, here's the site. A lot of us are in ways of, what I'm saying is this is going to really hit us in an industry where student loans can kill a deal again very quickly. And so you don't want to be stuck with a client that didn't take the steps prior to, and then you go to put them in a pre-approval process and the student loans never had a payment plan set up and they're completely now DTI'd out where they can't even buy a home. Dinez, have you ever had clients that pull their credit and they got 15 student loans and it's all over the place and there's no structure to it and you got to hit them for 1% or whatever the case is, right? So
Absolutely. I've had attorneys with $250,000 in student loans. 1% is a big chunk of change.
a lot of money, and even myself with student loans, it's, you don't think about it. A lot of us have buried our head in the sand for the last 2 or 3 years, due to the rules and regulations currently in place, that it was forgiven. I didn't have to think about it. They told me not to think about it. Said, forget about it. Well, now we don't want you to forget about it. If you're in the market to buy a home in the next year and you have student loans, check the site out. Definitely check it out. And for loan officers, check it out. Mm-hmm. So you have a resource for your clients to get plans and get them quick. Like Pam said, I did it. It was done in 5 minutes. Guilty as all can be. I didn't go through because I wasn't ready or prepared yet, but I know the plan's there, right? And I know I have a resource to go to. So do the same for you and your clients that use this as a resource. Last but not least. Yeah, exactly. I kind of want to finish off with, first let me do this. In Florida, there's a lot of bills change. We talked about condo reform bill. There's been some insurance. One of the good things I will also comment. So for anybody watching, I do a lot with mortgage associations or a mortgage association in Florida. So I'm in Tallahassee. I sit here and read these bills that we get through, and I'm very involved on the government side of our business in Florida. Now, with that said, I can share some of the changes we've seen. Like I said, the condo reform bill, the flood insurance we've talked about. There's a veteran disability coming along, which is really unique, where veterans that are fully disabled, all counties in Florida will have a way to verify that. And we'll be able to exempt them from collecting property taxes if they are fully disabled. So now we can save their cash to close by proving that they're fully disabled and exempt from property taxes. So we're just waiting for the governor to sign that part. The MySafe Florida, that's being rebrought back in July. That's probably a whole nother conversation we can go into, especially with an insurance agent. That's a really good topic. We talked about condo reform, the insurance. There's one that I'm missing. Oh, about insurance. So the governor did put in $400 million into what we call the reassurance fund. And again, maybe we'll have an insurance conversation one day, but that's good for Florida. And the reason being is, so insurance companies insure us for our home, but those insurance companies for claims have an insurance company that helps pay their claim. We call that a reassurance fund. Well, that money was very little, especially with all the storms and problems we've had in Florida over the last few years. That money, a lot of companies left because of that. They couldn't maintain the claims. They had no backup. They didn't have enough money. Whatever the case is, I think in the last quarter, we just saw 8 new companies come back to Florida, which is good, bringing back competition to hopefully drive prices down. Also, there is a bill that was passed that will help lower costs, probably about $100 or less on people's premium. Not a lot, but it's a start to see some of the tax reductions on insurance policies and some of those premium fees, they call them. So that's something really, really interesting that we have seen start to take place. And then the last one I wanted to share before we go into NAR is there's a program that we are supporting here at our state association, and it's called the Helper Act. And the Helper Act is something that is statewide or nationwide. And the easiest way to explain it, it's like a VA loan for your first responders, your firefighters, your heroes. And that Helper Act is 100% financing with no down payment or mortgage insurance for those classifications of people. We have quite a bit of support. It was introduced May of last year by actually a Florida Senator, Marco Rubio, and then the Democrat side was John Ossoff out of Georgia. And so I think there's like 120 to 30 support right now. We're needing more support. We want to see that pass this year and coming forward because, you know, we have Hometown Heroes in Florida. This is going to be 100% financing for those people, part of like the education and sheriffs and firefighters. So a really cool program. I just want to share. I've been trying to share as much as I can. So if you're watching this, check it out. It's called the Helper Act. And hopefully we'll see some more support and get some people to help us pass that bill. And that's a federal bill. That's federal.
Awesome.
That's great info.
We'll put that link on the page too. So.
Okay. Yeah, I can share you some more of the info from it. So, all right, let's take 5 minutes. And Dinez, I'm going to start with you. And this is more of an opinion based. You know, we know what's going to happen with NAR. It's the hot topic for real estate right now. What's kind of your opinion on the effects, and if you think it's going to have any effect on you as a loan originator and your process and your buyers?
I think it's really going to boil down, honestly, to the agent. I think business is going to continue as usual. And I think agents just need to, you know, be upfront with the buyer, explain to them what's going on, and be creative, you know, when it comes down to their offers. You know, I think buyers are always going to need agents. Agents are great, you know. They need someone to represent them. I don't know of a buyer who sits down and reads, you know, all 10, 12, 13 pages of a contract. Who understands what their contingency periods are. So I don't know. I think personally business is going to continue as normal, and I think it's just going to, you know, have agents go out there and just, you know, get a little creative.
Pam, what do you think?
I'm not seeing a huge difference in it yet, but I think like Daneza, I have a few agents that ask me how we think it's going to affect our business. And I think we will do what we've done in the past, is if we need closing costs and the seller's not going to pay it, we, you know, offer full price to do it. Or the agent's responsibility is to talk to the seller about these are the people you need to get this thing sold and why. And I know that the rule is that they don't need to pay a buyer's side, but buyers, I see listing agents that don't want to have anything to do with being a buyer's agent side. So I think that the agents that are out there all serve a good purpose, but it's interesting to listen to you, who is an agent. What's your thoughts?
So I agree with Dineza. I don't think business is going to be altered. A lot of it's going to be same as normal. Listing agents, just like every industry, you're going to have bad apples. But I think as a mass majority of agents are going to still, they're still going to talk to their sellers that, hey, getting 5-6% commission off this home and then dictating how it's being distributed. The big rule is that it's just not advertised, right? So the rule really comes down to boiling it to, all right, if I'm looking at the MLS systems and I see Dineza's homes for sale and I'm going to make 3% and Pam's homes for sale and I'm going to make 1%, whose home do you think I'm going to sell first, right? Or who am I going to show my clients to? And that's eliminating that. I think that's the big thing. So listing agents are going to be, the good ones are still going to do business as normal, because they know the value of buyer's agents and getting the right consumer to that home, and buyer's agents do that. And so I think that's going to be a big staple on how we move forward. Again, you're going to have your people in your markets that don't play fair, and that's okay. I think the markets will tell them how their business is going to be handled, right? It's going to be, we always say, let the markets decide. What do? We go day in, day out. Pam and I look in, we're like, what's our interest rates? I have no idea. The market's going to decide. This morning it got really good because whatever reason, and tomorrow it could suck completely because of whatever reason. The markets dictate how we do our business, and I think the same is going to happen for real estate. But what I want to do share from the mortgage side of things, a lot of people have asked us, and maybe you guys have experienced this, is, well, what's Fannie saying? What's Freddie saying? What's FHA saying? And how's this going to affect it? Well, we did get clarification that business is normal. If the seller is giving money for commission, it is not included in the IPCs, or the interested party contributions. So it's not taking away from the seller and getting funds to help them close the transaction, which I think was a big concern. And it could change. But we don't know. We're going to take it all day by day. But it's something that we'll bring up on these calls, as it does evolve, or as we hear information from our entities that control the mortgage side, and share that with you guys and girls, so we know how to move forward. Because that's what the purpose of a lot of this content is how do we move each other forward? How do we keep each other afloat through these changing times? I mean, Dineza, how long have you been in the industry?
27 years this year.
Pam, how about yourself?
39.
Right? You guys are veterans. I've been in it for 12, right? So I'm the new guy on the block with these two. But we all went through a 2008, 2010 change in our business, right? How hellacious was that?
Very.
It taught us not to panic.
Yeah, right. We will never forget that. So for any agents that are listening to this, talk to a loan officer who went through 2008, 2010, through our TRID changes that even affected your business. And this is what I kind of say, you're going through a little bit of that. You're going through a change that we felt, back in 2008 and 10, that was, we didn't know what to expect. We didn't know what tomorrow was going to hold. We didn't know how our business was going to move forward. Don't worry. Just breathe, and it will figure itself out. And today we're thriving. It's like clockwork. We know exactly what to do, when to do it, how to do it. And every time there's a mistake, a new form gets added to our disclosures, and we just keep moving forward. And that's what I would suggest to everybody else. Just keep moving forward. Exactly. Just keep on swinging. So,
and you remember what happened back in 2008, which I believe may happen this time around. Those who needed to leave the industry left the industry, and those who stayed on, we continued on.
Yeah.
If you do not know how to negotiate as a real estate agent, you are about to have a hard time. And that's my
Correct.
opinion. I think you're going to have a really tough time. You're going to have to pick up the phone. You're going to have to call that other agent. You're going to have to negotiate compensations, know what's going on. Like, you're going to have to communicate. And you're right, Daneza. It's going to weed out a lot of people, and that's okay. That's okay, because that brings new opportunities for others, and it refreshes things. So it's not a bad thing. Any last comments, Pam, Daneza, anything you want to add that we might have not covered, or about Brokers and Bagels, something you learned, anything?
Well, I always learn something from Daniel and from Pam too. So, I mean, I love you. You guys know that I love having these calls with you guys and sharing. Um, it just shows you that we're all loan officers and we're in the same industry, and there's enough business to grow around for everyone. And it's not a competition. It's just a matter of helping each other out so we can all thrive. And that's how it should be.
I agree.
I do too. And I think because we're able to work remotely, it's good to connect with people, especially from different areas of the state, and see what the different issues you all are having, so we're not caught off guard when it happens to us.
Correct.
Yeah, and you know, going forward, we're going to evolve this. Brokers and Bagels, Pam has started to put this, and this will continue. And Brokers and Bagels might be, maybe we'll focus on a certain topic, right? We've done down payment, we've done our home prep platform, student loans. And so, and then also check out, if you're still listening to, we're going to have weekly calls on different things as well. So stay tuned for a lot of that information, a lot of that content. As we learn, we want to share it. I think that's what us three are really eager to do, is we get excited. Like, talking to these two makes me excited. Like, I love this business, and I get to go home and talk to my dog doesn't listen. So for you two, it's, you guys get it. You're in the trenches. And so thank you all. Thank you, Pam. Thank you, Daneza, for being here.
Thank you.
And we'll keep this ship moving, right? So
Yeah,
Absolutely.
and Daniel, thank you for moderating us all the way through this. And Daneza, your very incredibly informative answers. And I love working with you guys. This is a great thing started.
Virtual hug. I love you guys. Thanks.
well, I'm going to go ahead and end the stream here. So for anybody watching this, please check us out. Check us out, Condo Homeowners. Again, we're going to be evolving, so we'll be on different platforms.
And give some feedback.
Please.
Yeah, we'd love to hear feedback.
All right. With that, everybody have a great day.
You as well.
You too.